Welcome back to Fat Bear Pod. I'm your host, PB. It's looking like a slow Friday as nothing much happened in the market, price-wise. But this is usually the calm before the storm. Bitcoin still dragging in the 87K region like it's waiting for a train that never comes. You can almost feel it, right? Like it's about to snap one way or the other, up to 100K or down to 60K. Now let's zoom out. The total crypto market cap, 2.84 trillion. The 24-hour volume at 73.4 billion, a 5 billion drop from yesterday. And then we got the fear and greed index, still chilling at 33. Same as yesterday. Bitcoin dominance, 60.8%, also unchanged. For the alts, the top gainers of the day are safe Walrus, Chain, and Toncoin. The biggest losers are Soul Layer, Mubarak, Cat in a Dog's World, and Beam. Now, let's talk about how the big bad world of Wall Street is screwing with my Bitcoin vibes. Wall Street took a nosedive yesterday because, surprise, tariff talk is back. It's uglier than a rug pull at 3 in the morning. Trump's gearing up to slap some car industry tariffs on us come April 2nd, and the suits are freaking out. Tech's getting hammered hardest, down 2.46%. Because apparently, uncertainty is the only thing these markets hate more than me after a bad trade. Businesses are panic buying inventory like it's Black Friday, and execs are losing their optimism faster than I lost faith in altcoins back in 22. Barclays even slashed their S&P target to 5,900 from 6,600. The S&P is already down 3% this year, and Nasdaq's off 7%. Seems like no one catch a break under Trump. And now there's muttering about higher rates because tariffs might jack up prices. Great. Just what I need, as if everything hasn't cost an arm and a leg already. Up next is some news in the crypto world. Here's the deal. Wyoming's been cooking up this plan to drop the Wyoming stable token, catchily dubbed WYSD, sometime around July 2025. They're calling it the first fiat-backed, fully reserved stablecoin issued by a public entity in the U.S. That's a mouthful, but basically, it's a dollar-pegged token with a state seal of approval, backed by good old U.S. Treasuries cash. The pitch? It's going to be faster and cheaper for payments. Think buying a latte in Jackson with WYSD instead of fumbling with cash, or a card that's still got a 3% fee. Plus, they're planning to rake in interest from those reserves and funnel it into schools and infrastructure. Wyoming's been crypto-friendly forever, over 45 blockchain laws since 2016, so this isn't some random flex. They've got the chops, but I'm still eyeing the execution. Ethereum's been prepping for this Pectra upgrade. They've just rolled out on this shiny new testnet called Hootie because Ski and Sepolia weren't cutting it. What's Pectra, you ask? Just another Ethereum upgrade promising to fix all our problems. Faster transactions, better staking, smarter wallets. The usual fairy tale. They're doubling the blob count from 3 to 6, which is supposed to help Layer 2 breed easier and cut fees. The problem is, this is their third testnet try. Ski flopped. Sepolia started mining empty blocks like it was auditioning for a ghost town, and now Hootie's the last hope. The devs are exhausted. They're running on fumes and prayers. Why does this matter? Because Ethereum's been bleeding street cred to Solana and every other ETH killers that's faster, cheaper, and doesn't make you feel like you're funding a dev's therapy bills. Pectra's supposed to be the big fix. Keep the stackers happy and juice up the Layer 2. But I'm just here hoping it can pump ETH back above 3K again. The SEC filed joint stipulations to dismiss their cases against Kraken, Consensus, and Cumberland DRW. Kraken's been fighting the SEC since November 23 over claims they were running an unregistered securities exchange. Consensus got slapped in June 24 for supposedly peddling securities through MetaMask staking. And Cumberland DRW caught heat in October 24 for allegedly playing unregistered dealer with over $2 billion in crypto trades. Heavy stuff, right? Except now it's all just poof, gone. What's the bigger picture? Word on the street is that this is part of a Trump-era pivot. New White House, new SEC vibes. And suddenly crypto's not the boogeyman anymore. They've already axed cases against Coinbase, Robinhood, Uniswap, and more, and now these three get the golden ticket. Kraken's even hinting at going public. which is bold after all this drama. Time to go over DeFi land. Sonic, the layer 1 talk of the town, just clocked $1 billion in TVL faster than I can chug a coffee. We're talking just 3 months from launch to $1 billion locked up. That's not just growth. That's a rocket ship with a side of suck it. Haters. Users are bridging $250 million worth of stablecoins over, parking them in farms with 15% plus APRs, and chasing high-yield liquidity pools like it's 2021 all over again. Sonic's unique addresses also hit an all-time high. How'd they do it? Well, Sonic's got the tech flex for 100,000 transactions per second and sub-second finality. Their fee monetization program is handing devs up to 90% of the fees their apps rake in. Kind of like Web 2 ad revenue, but with less pop-up ads and more decentralization. Then there's a staking and lending boom. Shadow on Sonic DX alone is pulling $38.6 million in volume, and big dogs like Aave and Pendle are jumping on board. It's like Sonic threw a party, and everyone brought their wallets. Walrus, this fancy decentralized storage protocol cooked up by the Missing Labs crew, the Sway blockchain wizards, finally went live on mainnet yesterday. And with it came the airdrop everyone's been yapping about on X. They dropped 4% of their 5 billion wall token supply straight into the wallets of early adopters and Sway ecosystem diehards. What's Walrus even do? It's all about storing your PDFs, cat videos, and whatever else on a decentralized network that doesn't choke on big files. It's fast, cheap, and supposedly bulletproof even if 2/3 of the nodes take a nap. Who scored? Well, if you minted those testnet NFTs, stake some Sway, mess around with DeFi like Krea or Swayland, or just generally kiss a Sway ring, you might have woken up to a nice little pile. Some user got 90,000 tokens. Others are flexing thousands like it's pocket change. Another 6% of the supply is still dangling for future distributions. So if you miss this round, don't cry too hard. There's more coming. Maple Finance, the folks who've been bridging real-world lending to crypto, has been cooking up this thing called SyrupUSDC. It's their liquid, yield-bearing stablecoin, pegged to the dollar and backed by over-collateralized loans, promising around 11 to 12% APY with some extra drips rewards thrown in. They've also drizzled that SyrupUSDC onto Morpho, the decentralized lending platform that's all about flexibility and letting you borrow against anything. You can supply your SyrupUSDC, earn that sweet 11% yield, then borrow USDC at around 5% right now. The arbitrage gives you a cool 5% net yield per cycle, if you loop it, compounding like a mad scientist. Maple's hyping it up, saying capacity's climbing to a 20 million USDC limit, and the X crowd's losing their minds over this permissionless cash meets prime RWA collateral mashup. It's like Maple just opened a candy store, and everyone's grabbing for the free samples. The airdrop we're diving into today is Reservoir. Reservoir is pitching itself as a decentralized dreamboat we've all been waiting for, scalable, efficient, and yield-bearing, ready to onboard the next $1 billion in assets. They've got a USD, their dollar-peg stablecoin, plus SRUSD for liquid yields and TRUSD for term-based gains, all running permissionless on Ethereum and Berachain. It's all backed by a mashup of digital and real-world assets. Bull or bear market, they're claiming better yields than the competition, with less volatility and more diversification. Now, the farming bit. The max points play is to loop their SRUSD on Contango, which hooks into Morpho's lending markets. You can toss your stablecoin into Contango's SRUSD and USDC Morpho market. Crank the leverage. Max leverage is 9.25x, but stick to a lower leverage unless you know what you're doing. Then watch the points roll in. You're earning 1 point per SRUSD per day based on the notional value of your loop. So, loop 1,000 SRUSD at 5x. That's 5,000 points daily. Sweet deal, huh? And you pocket extra yields too. That's everything for today's episode. Catch you guys back here tomorrow.